As the global economy emerges from the coronavirus pandemic, Saudi Arabia and its allies in the Organization of the Petroleum Exporting Countries OPEC have shocked the oil market with a decision to keep supply in check, sending prices surging and adding to the pre-existing inflationary pressure. 1 year on from the outbreak of a bitter price war that sent crude below zero, the Kingdom of Saudi Arabia showed that its priority is preserving the hard-won oil recovery rather than worrying about tightening the market. OPEC and its allies had been debating whether to restore as much as 1.5 million barrels per day of output in April. From trading houses in Geneva to Wall Street banks, much of the oil world was in agreement that global markets could use some more barrels to temper a rapid run-up in prices. But after being urged to, quote, keep our powder dry by the Saudi Arabian Minister for Energy, Prince Abdulaziz bin Salman, OPEC members agreed to hold steady at current levels, with the exception of modest increases granted to Russia and Kazakhstan. The Saudi minister went one step further, saying the additional 1 million barrel per day voluntary production cut the kingdom introduced last month was now open-ended. That means the cartel will still be withholding about 7 million barrels per day from the market, equivalent to about 7% of the global demand, even as fuel consumption recovers in many countries. Brent crude rose as much as 5.7% in London, and it has already rallied about 30% this year to almost $68 per barrel. Throughout the first quarter, OPEC has kept production below demand in order to drain the glut that built up during the COVID-19 lockdowns. According to the organization's internal estimates, without additional supply, that deficit will widen significantly in April. With the bond market already on edge for signs of inflation, the aggressive move from OPEC could become a headache for the US Federal Reserve and the European Central Bank. And it's not just oil that is surging. From copper and steel to corn and soybeans, the prices of many commodities are rapidly rising. The rollout of coronavirus vaccines and continued government stimulus are among the reasons financial markets are anticipating an acceleration in price growth, although such forces are countered by weak labor markets. The decision comes at a tense moment for the Saudi-American alliance as the US President Joe Biden seeks to reset the relationship with Riyadh and particularly with Crown Prince Mohammed bin Salman. Under the former US President Donald Trump, the White House may have reacted quickly with a barrage of tweets to the threat of rising gasoline prices as it did in April 2018. However, the reaction of the Biden administration is unclear at the moment. Russia and Kazakhstan secured exemptions from the deal, allowing them to boost output by 130,000 and 20,000 barrels per day in April, respectively, due to continued seasonal consumption patterns, according to a statement posted on OPEC's website. The two nations were granted similar allowances for February and March. According to the statement, OPEC will meet again on the 1st of April to discuss production levels for the month of May.